Money FM 89.3. Best of breakfast. Companies to watch.
All right, I am happy to be here with Dan Koh to talk about what should be on my radar.
Yes, I'm happy to be here with Rough Ryan as well.
all
this
right.
Thursday morning. Ryan, do you care it enough to invest, Ryan?
Do I care enough to invest?
No, do you carried enough to invest?
All right, where are we going with this?
We're going over to Centurion Accommodation REIT. Singapore's REIT market, we've got a new competitor. It's not your typical office, retail, or logistics trust. It's called Centurion Accommodation REIT, or CAREIT for short.
Right.
And it's the first pure-play living accommodation REIT on the SGX.
I'm going to call it Centurion REIT. I would prefer that. So I would call Centurion REIT, but nice one, CAREIT. Like you pointed out, we've got a lot of REITs starting to come into the market. This is the latest one, and it looks like quite a bit of a blockbuster.
Yes, certainly so, and it seems like that might raise some eyebrows because CAREIT promises yields above 7% and has already caught the attention of institutional investors. So is this IPO worth a closer look? Well, stay tuned for the companies to watch because that's what we're going to be dissecting today. CAREIT was constituted in Singapore just this year and sponsored by Centurion Corporation Limited, a name familiar for its worker dormitories and student housing projects. So the REIT focuses on two specific asset classes that oftentimes fly under investors' radars. We're talking about the purpose-built worker accommodation in Singapore and the purpose-built student accommodation across the UK and Australia.
That's right. They're quite a market leader in that space. And Centurion also has been doing well as a stock. Performance-wise, it has been quite decent.
Yep.
Looking at some of the previous quarters.
Yeah, it does seem like they're doing fairly well. And also, I guess after all, if they're considered to be a necessity for the space, it explains why they have been doing fairly well over the past few years. So in layman's term, Centurion focuses on dormitories for foreign workers and student halls. Now, through this new IPO, CAREIT specifically is raising about $771 million at an issue price of 88 cents per unit. So that gives it an initial valuation of about $1.5 billion. And the REIT is expected to list on the SGX main board on September 25th, 2025. That's happening tomorrow. So for retail investors, just about 13.2 million units are available in the public tranche, while the bulk goes to placement and cornerstone investors. So notably, Centurion Corporation will retain a significant stake of about 46%, aligning its interests with unit holders. Now, let's look a little bit closer into their starting portfolio, which includes about 14 properties across Singapore, the UK, and Australia. Now, in Singapore, it's mainly purpose-built worker accommodation, or PBWA for short. Now, overseas, it's student housing, known as PBSA, and these properties house over 25,000 beds.
Yeah, I think they've got 8 of them in the UK and 1 in Australia. So that's for the student side of things.
Yep, it does seem like they really have quite a bit of portfolio and quite a bit of dominance within this space when it comes to accommodation. Soon after the listing as well, CAREIT plans to acquire another student housing property in Sydney that would lift its portfolio to 15 assets and just over 27,000 beds with an estimated valuation of $2.1 billion. So now the numbers that investors care about. We're talking about the gearing ratio. At IPO, it will be about 20.9%, which is relatively conservative. And after the Australian acquisition, it rises up to about 31%. Still fairly okay, considering how, Singapore REITs can leverage up to 50% of their asset value if they maintain a minimum interest coverage ratio and add a 45% gearing limit, which is the level that most REITs target. CAREIT would have a debt headroom of around $559 million. So, Ryan, are you a dividend fan?
I am.
Who doesn't love money? Well, projection distribution yields are at 7.5% for 2026 and 8.1% for 2027.
Wow, that's pretty decent.
Yeah, so occupancy rates are relatively healthy too, nearly 98% for worker accommodation and over 94% for student housing.
Yeah.
So it does seem like investors might be happy for this one.
I think it kind of shows the industry growth and the demand for such accommodation. For workers, especially when you look at the construction industry, there is a demand for some of these better built facilities to house them, and also for student housing, also a reflection of student demand, where people are going overseas, they need these accommodation facilities.
Yeah, it is a necessity after all. So this makes CAREIT one of the higher yielding new REITs in recent years. Now, these estimates are based on the enlarged portfolio and factoring the commitment to distribute 100% of its distributable income through 2027. Now, distributions will start to normalize to at least 90% of annual distributable income. And the first distribution that dividend investors or investors of this stock will likely look at having their first payout from the first payment expected to come in about 31st of March of 2026. After that, semi-annual payouts can be expected like most Singapore REITs. So to sum it up, the bull case for CAREIT, well, it's a new asset class in Singapore's REIT market, accommodation focused rather than the usual retail or office exposure. Well, demand drivers seem strong as well. We've got foreign worker housing in Singapore remaining essential for most part, while student housing in the UK and Australia both enjoy steady international demand. And also, the third point would be its sponsor, which is keeping skin into the game, and gearing ratio or gearing level leaves room for growth through acquisition. So it does seem like they have, a differentiated angle with an attractive projected yields that might bring in some investors. In fact, just recently news broke of their stock or their interest being about 16.6 times oversubscribed, Ryan.
Yeah, I think quite different from what you get as a REIT. Normally you see shopping malls, industrial factories and so on. This is a play into the accommodation space.
Yeah, so talk about diversification. This might add to the list. Well, the bear case for CAREIT, one thing to note is they are heavily concentrated in worker and student accommodation, not as diversified as other REITs, so that is one risk to take note of. Now, some worker dormitory leases in Singapore have shorter land tenures, which can affect valuations and future incomes as well. And overseas assets, let's not forget, they bring foreign exchange risk, especially with the pound and Aussie dollar. And while recent rental growth has been relatively strong, there's always the risk that new supply or policy changes could likely squeeze demand and pricing. So while the retail tranche is also small, allocations for individual investors could likely be limited in the market. But having said that, Ryan, on paper, yields are compelling. Accommodation theme fuels a unique gap in Singapore's REIT universe. So I'm going to give it a heart.
Wow.
I'm going to carry it.
All right. Interesting. I think it is quite attractive on the argument been playing out or outlining.
Yep.
Some folks may be wondering, what's the difference between CAREIT, which we just talked about, and the parent company, Centurion? So if you want a more focused play into the accommodation space, one that's more asset-light, then CAREIT might be for you. If you want a play or exposure to a company that is into the development and also corporate growth, then you might want to look at Centurion.
All right. Thanks a lot for that, Ryan. So text us 88550893. Tell us whether you think CAREIT should be hard or not. Okay, Ryan, that's all we have for today's Stock in Focus, CAREIT. Now, here's some fun facts about Centurion Accommodation REIT. Now, instead of measuring gross floor area or net lettable areas like most REITs do, CAREIT highlights its portfolio in terms of beds. So it's a very different measurement we're seeing here. And after its post-IPO acquisition, like I've mentioned earlier, it will own over 27,000 beds across Singapore, the UK and Australia. That makes it the only REIT in Singapore that can say, I own a slice of 1,000 beds across the world.
Oh, yeah. I can see with that.
What do you call a real estate agency opened by a detective?
A real estate agency opened by a detective.
Yeah. Very famous detective.
Holmes? Okay.
Very close. Sherlock Holmes.
Okay.
What do you call the man who sells impossible houses?
Impossible houses? Mr. Impossible?
A surreal estate agent.
Real.
Real.
Okay,
So
SIR.
real
Not bad,
estate
not bad.
agent. And that's all we have for CAREIT.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.